All right, hello everybody. Welcome into the NinjaTrader Ecosystem webinar room. Before we get started with today's presentation, I'd like to take a moment to test for picture and sound. So if you can hear my voice and if you can see the slideshow on screen, can you type the letter Y into the room? And that'll confirm that you can hear my voice and see the screen. All right, looks like I'm getting some confirmations. Thank you all for confirming that. And thank you all for joining us in our webinar room today. My name is Ryan Lai, and I work at the NinjaTrader Business Development Team here in the Denver, Colorado office. And we have a very special event for you today with JB Wells of Drummond Energy Bands. To start things off, I'm going to put a poll into the room, and the poll is to help me get a type of gauge of the type of user in the room. And the poll is, are you using NinjaTrader? So while you have a chance to fill out that poll, I'm going to have a chance to read off a disclaimer here and a disclosure. So I'd like to mention to everybody that it is important to understand that there are substantial risks in trading commodity futures contracts, and you should carefully consider whether such trading is going to be suitable for you, and this will depend on your specific circumstances and financial resources. It is possible to lose all of the funds that you deposit with your broker, and you can even incur losses beyond these amounts. You can always inquire to our risk disclosure document at the following link if you wanted to take a look at this. You can get the full CFTC risk disclosure there. Also, please remember that these training webinars are not a solicitation nor a recommendation, but simply educational in nature. And this presentation is being presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. If you have questions about the NinjaTrader brokerage, we would ask you to direct them to brokerage-sales@ninjatrader.com, and you can also call 312-262-1289. All right, looks like most people had a chance to fill out the poll, and in the lead we have our lifetime license key users. So it's great to see our users that are committed to the platform interested in our vendors' products and services. And then we also have quite a few number in the room that are not using NinjaTrader. So if you currently you're not using NinjaTrader, I'm going to share your link with you and you can download it for free now. And then for those of you who have already purchased, have already downloaded it, if you're curious about purchasing or leasing, you can look at our leasing or purchase options at this link. All right, so with that being said, we are very excited for this unique event today with JB Wells, as he's going to share what he believes to be the 3 most important skills a trader must possess. So thank you again for your attendance today. And without further ado, it is my pleasure to introduce into the NinjaTrader webinar room, JB Wells. Go ahead and take it away, JB.
All right, well, as the sign says, welcome everybody to your trading brain hack, and thank you, Ryan. We wanted everyone to know that our software is written exclusively for NinjaTrader 8. Well, there's a variety of people here for a variety of reasons, so I'm first going to encourage you all to turn your cell phones off to limit your distractions for the next hour. And it doesn't really matter if you're catching us on the replay or you're here right now. Today's going to be a little fun. We're going to first explain to you who we are, then we're going to get into what we think are the 3 skills all successful traders have. Finally, we're going to get going into experiencing some charts together with some real-life trading examples together and learn a strategy that will lower your anxiety, stress, and frustration so you can create the trading business you're looking for. So first of all, please note this is the trading disclaimer. Today's information is intended to be purely educational, and all trading involves high risk. So now we got that out of the way. Today's going to be fun. We're going to first explain to you who we are, then we'll get into what we think are the 3 skills all successful traders have. Finally, we're going to experience some real-life trading examples together to learn a strategy, lower your anxiety, and really get into creating how this can work for you to build your business. So let's see here. So if you have any questions, just go ahead and type them in the room. Ryan's going to keep an eye on that, and we'll get going into that. Okay, so a little brief synopsis about us. Charles Drummond has been trading a variety of markets since the 60s and has experienced substantial success over the years. Charlie's always kept his students' needs at the forefront of his mind by generously sharing his market developments. He's a very private person who does a weekly video for our Tuesday free webinars that are open to anyone that's interested. and he prefers to communicate only using email and video. There's another website out there that bears Drummond's name, but Charlie's had a falling out with that website and he has no affiliation with it any longer. And he wanted to help originally traders and was never compensated, never received a dime for his life's work. This wasn't his goal anyway. However, he did want the support that would be provided to traders to be 5-star. And this is now finally happening here at Drummond Energy Bands. And then we have the glue, which is Trish Nolan, that helps us accomplish so much that would not be possible without her. And myself, I'm JB Wells. I did really well when I first started trading about 17 years ago. Let me ask you, how many of you clearly know everything about technical analysis? Well, I was doing well creating some of my own software, but I went ahead to spend some of that money, about $150,000, on educating myself with what technical analysis was really out there. You know, nobody wants to throw away money on software and courses that you don't need, but that's how I felt in the end. Now, I'm not saying that I'm trying to give back for the trading success that I've had and make myself look like a good person or an experienced trader, even though I'm both. You see, what I wanted to do was help Charles Drummond teach his life's work in a way that would allow any trader, experienced or brand new, learn very quickly how to use it with a simple piece of software that I created called GPS. This GPS software was based on the pioneer work that veteran futures trader Charles Drummond had creating when he looked at crowd geometry. So first of all, I'd like to talk about the 3 most important skills every successful trader has before we get into some chart examples. You know, these key strategies or skills combined with any trading edge will make yourself a dangerous force to the markets. And I'm referring to the trader's mindset and how the mind hooks into the trading edge. So you're going to be powerful when you have connected the intellectual and mechanical centers in your mind. So let's talk about this first important skill for traders' system and mind. Do you remember when you were little, when you had dinner and you played connect the dots, right? You know, when you finished taking your crayon to connect the dots, you had a picture of, in this case, it's a dump truck. When you're connecting the dots in your mind with your trading system edge, your visualization goes way up and anxiety drops drastically as you expect things to happen the exact same way that it did all those successful times before. And you're creating a yes and no pattern in your mechanical mind. And this is the start point that you're waiting for. And being relaxed, you know how to handle whatever happens. You know, Charlie back in the 60s was the first to look at multiple time periods and setting up 2-dimensional leans of support on at least 2 time periods. So you're going to learn in the time we spend together, that as a trader, we don't always know what the market is saying. You know, what I mean is that being honest with ourselves that our method is not connecting the dots clearly will help us let the moment go and decide not to trade. And this honesty and truthfulness is mandatory to admit to ourselves when it comes from having a clear winning system to follow. So you're going to see in a few minutes how our system will provide these leans of support in upcoming chart examples that will connect the dots. So when we have clarity in our intellectual trading mindset, our system will only have one choice. With the experience of knowing that our high probability edge will likely work out in our favor more times than not, we go against the crowd when we know they cannot continue to pop the market up through a lean of resistance, for example. Numbers that get weaker will be how we will know this. Wouldn't it be nice to know when our resistance is really going to hold in advance? And we're going to experience some of those examples with numbers that we show how we can achieve that clarity in our trading mindset. So once the mind has connected the dots to know the structure of the crowd's lean of resistance with clarity, we have lowered the resistance in our mind. So making a decision and accepting the risk on the trade is just what we do next. This mechanical and intellectual brain centers connection is complete when the GPS numbers make sense. So let's see what all this means with some chart examples. So we're going to be looking at our charts right now. I'm going to switch over here. So this report here that we're looking at, first of all, we do this every day before 8 a.m. We do this for our own trading. And today we were looking at 63 here in the S&P December futures contract. Now, whether you're a futures contract trader or stocks, or maybe you're into options, you need to key off of a certain underlying instrument, it really doesn't matter, because the strategy that was working back in the 60s is still working today, and it's based on the crowd energy. So today we said, the best bet would be 63 is the lean, the determining force. If below, we could get down into 50, 56. If we're going to get above, we thought maybe 65 half. So let's just take a look at some of the charts that we look at during the trading day. So I want to just draw your attention to the chart on the right. One of the things that we do before we take any kind of trade is we connect the dots. What we're looking at is we're looking for two-dimensional energy. Now we look over here on the left chart and reference it to the chart on the right. This chart here on the left has a purple line that's approximately here at 64. Now that line is from the daily chart. We have several overlays on this left chart, which include a 50,000 tick chart, a daily chart, and it's all superimposed here on this 10,000 tick chart. More importantly, what it does is it gives us the confirmation on multiple time periods. So when we can come into this chart and we can line up two charts, like for example, here on this chart, we've got resistance coming in right here. I see there's a couple of questions. I'm gonna get to those. I see resistance coming in right about here on this left chart. This is a focus chart resistance. It's being drawn here on the right chart with this red line here. And that is typical of the left chart, the focus chart, 10,000 tick chart being picked up, as well as that purple line. That purple line is from the daily. So that is a start point. In other words, we have a start point in which we can start to look for some clarity. And what I mean by clarity is when we look at our numbers at the very top of the chart, you'll notice that on this particular close right here, you can't see it, but there's a black square underneath that dot, and that's the close. We have on close a pink down arrow. Now that arrow is an exhaust arrow, and that prints one bar in advance. And it lets us know that the market has a very, very high probability of reversing, So when we go to our trade chart here on the right, we're noticing the same kind of thing, that when we close right here, for example, we're into an exhaust situation, and we have a down pink arrow here for this next bar, this bar right here. So when these numbers at the top start to weaken and get smaller, what we are looking to do is we're looking to trade locate. You can see that we're in this upper red energy band. So when we trade, we never forget, don't forget the lean, because the lean is our start point, right? Don't forget the lean. Now, the key about trading this way is the brain can hook into it mechanically. Intellectually, we picked a couple of lines on the left chart. We've got a purple line, we've got a resistance line here. We've actually got underneath it here, we've got a yellow line, and that is the top of this yellow area, which we call area 5 right here. So we've got a confluence, if you will, if you're into Fibonacci, that is resistance. And what we want to do to the chart with the chart on the right is we want to pick up that resistance to see if it truly is resistance. And if it is resistance, what it's going to show is we're going to see down arrows, we're going to see weakening numbers, and we're going to build a wall of resistance. Now, this is a wall of resistance right here where our resistance levels start to go sideways. So this is a very important point to have the timing, which provides the clarity, along with connecting to the dots, having the two-dimensional lean, now we can make a decision. We can decide that, yes, in fact, this crowd energy that's trying to pop up through these levels is not going to be able to continue, and resistance is in fact going to hold like resistance. So somebody asked the question, how many trades typically do we see in a day? And in our trading room that we had today, what we're looking at is we're looking at the bigger picture, meaning if you're a day trader, we want to tie in what the daily's doing with some higher charts, and then look to get on a trade that's going to continue in the S&P, typically at least 4 points. Okay, so depending upon the structure of the market on any given day, you could have several trades. Today we had a couple of trades. The thing about it is, when you're trading every day, this was one of our trades here that we got short with here, a little bit right here. I guess it was 3.5, and the market sold down. Now we were looking to, again, lean on this 64 area, and we were looking for an exhaust condition, because when we're trading, the thing that we're looking for is we want to see the market, if we're going up, being lifted, the offer is being lifted, and we see that in the geometry that's being plotted, with the numbers. And when I created this GPS that's based on, this time-tested system of Charles Drummond's from the 60s, it was to make it simple for people. And what we're looking at is we're looking at an area in through here between this solid white midline right here and this white dotted E-mid. And the numbers at the top tell the story. What we're seeing is we're seeing the numbers getting weaker. So it means that this area in through here, the solid white midline to the white dotted E-mid line, cannot push up anymore. So that crowd energy just on this one time period is showing that it can't push up through this energy on the left chart and the daily chart. So this is very interesting to note when you're timing your trade, because the refresh is really what we're all about. We want to see whoever's in the order flow give up and puke, basically. They're trying to pop the mark. There's going to be a point where it's going to have no effect, and there's going to be an exhaustion point. Well, geometrically, we know where that precisely is, and where most people may be getting in, we're going the other way, right? And we're looking, like I said earlier, we're looking to fade it, but we're doing so because we're not forgetting the lean. We always look for the lean for a two-dimensional start point. So somebody asked, why are we using tick charts as opposed to like minute charts? And it's a good question, because minute charts are a really great way to organize how many bars you have per day, and tick charts can vary, depending upon how much volume is being put in the charts. One could flip to a constant volume chart, to guarantee so much volume in each bar. But what we find with tick charts versus minute charts, since somebody asked about a 5-minute chart, is that it provides a way to organically show the dissipation of energy. And it's a pretty esoteric concept that, if you've never been exposed to it before, but what we're doing is we're looking at the collective crowd's ability to push price. And we know they're very powerful, and we know we don't want to stand in front of them. But there are times when we understand very specifically that they're going to have a very hard time. Like, for example, it's another opportunity right here with this close here, same condition, right? Down pink arrow up at the top, down red arrow. So we're expecting, in resistance up here. Now this is daily resistance, this big fat red line plus this purple line. This is daily resistance. We're expecting that if our chart on the right goes up in there and exhausts, we get weakness on the numbers, which eventually they go zero, then we're going to look at getting in on the market. And it's not so much as, getting in precisely to the tick, but it's knowing the lean. What are you leaning against? Because if you're not leaning against something two-dimensional that's going to hold your stop, why bother put the trade on? So when we take these trades that are exhaustion type trades, like for example, this one up and through here, the minimum target is back here to 61. So in the room, what we said was, if you can get short here, 3.5 or better, then the minimum target's going to be 61. And when the market flushed on down, you can see that there was no reason to get out. We were getting some strong energy denoted by strong numbers, and we weren't building a wall. So for example, we're closing here, we're getting a lower support level here, we're closing there, now we're starting to build equal support. So we know that down here in this lower energy band, with the numbers here starting to get weaker, that this would be a really good place to take at least something off, and then we can trade manage for the rest, knowing that 63 today is a very significant level for us. And you can see that how 63 basically for the day has been holding as a very significant level. Now earlier today, before we open or when we opened the room, before we started to look at the markets, we give a synopsis and we said, the daily chart is showing weakness. And when we look at the charts, it's not so much like, oh great, you've been looking at these things for 5 years or 10 years, it'll make a lot of sense to you, but it won't to me. When we look at a daily chart, for example, the daily refresh area is said to be pushing down, 408% of pushing down. So when we got up into the top up here, which is about 64, we noted that yesterday we refreshed the push back up from the weekly, but the daily's pushing down, so they're kind of fighting. So we knew that, we mentioned that today could go a little sideways because we felt that both charts were somewhat opposing. So when you're looking at that and you're taking that into account, like for example, I'll just look at another one here. Let's say that you're up here at this point in time, okay, at the 63 level. This is just after 2 p.m. Eastern. And say you wanted to take that trade, okay, so you're up there. What are you looking for? Well, you're looking for a lean of resistance, number one. You want some kind of two-dimensional energy. You've got focus chart resistance, and this yellow dotted line is from the daily, so that's daily resistance. Now, if your trade chart's picking it up, and you're not getting strong numbers at the top, you notice we're getting a bunch of zeros, and we're putting in these things called walls. We're putting one in here, we're putting one in here, and this is for this upper red energy band, all for the 63 area. Then, if you're long, this is probably a good place to get out and to look for entry to get short, right? And excuse me, these numbers, somebody asked, what do they stand for? And essentially what they do is the top number, okay, looks at the ability for our upper energy band to hold. In other words, it's what we call termination. So price will terminate. So you'll notice that there's a bunch of dots here. Okay, this is actually our energy band. We're just plotting as dots. So on this close right here, okay, you'll notice at the top we get a 0 that plots for the next bar before it even trades. What it's saying is it's saying the energy band up here is going to hold, okay? And what the number below, this is what we call GPS, this one's called GPS2, but the GPS2 number, the number down below the top, when it's getting weaker, what it's saying is it's saying that the crowd energy, the refresh down in here, is unable to push price. So what can happen is if you've got your termination, your energy band set to 0, you're getting zeros, then you know the energy band or the top's coming in, and a wall should form. And if the refresh is not pushing up with some strong energy, it's not going to be able to take out the energy band or the wall, which is what's denoted when we have weaker numbers, okay? So by the virtue of just knowing that these numbers are registering you, being somebody that's starting off with us, within 30 days, being in the room, getting some insight of how we deal with these setups day in and day out under all market conditions, you can come up with the same rationale that we're going to come up with. Whereas before, when there was no numbers, you had to spend a lot of time really getting into understanding a lot of, individual concepts and then combining them all into something called a strategy. And what we've done is we've created a strategy with the numbers so that your brain, once it's picked structures, in other words, lines to lean on, two-dimensional lines, then you can drop down to the trade chart on the right and look for the numbers to confirm, or deny your entry and your clarity for the timing. So that kind of thing. So let's see. Somebody's asking about trending days versus when price goes sideways. You may not consider today as a day where price does go sideways. We do. Today was, if we look at today was a pretty much a sideways action day, and the way we define that is you can see this solid white midline. It's meandering kind of sideways pretty much for the whole day. Well, when we close below it, that's indicating what we call congestion entrance. When we close back above it, that's called congestion action, or what you would probably already consider a sideways market or a trading range. So when it does that, back and forth, these closes going above and below the solid white midline, we know that, this is a sideways market. And we already said earlier in the room, we were expecting that because of what the daily, weekly were doing. But we knew exactly if we're going to trade locate where the top of the range was we would play, for example, 64. So let's see here. Somebody says, for newbies, can you explain some of the terminology, like what is a lean? And certainly, a lean is really just, where we've got multiple time periods or multiple time frames of a resistance coming together. Like, for example, on this chart right here, I know there's a lot of arrows here, so I'm going to get rid of a couple. But this yellow arrow right here, I'm pointing to a purple line, and that's from a daily. That's from the daily chart, okay? That's that 64. And that resistance level is our resistance level. Here, let me bring the daily chart in here so you know exactly what I'm talking about. The white dotted E-mid line right here on this daily chart, we're using a 1440 minutes, basically a daily chart. That line right there is drawn here on this 10,000 tick chart in purple. It comes in about 64. Now there's a resistance level, which is what red line here on the 10,000 tick chart. So that's significant for us today for a bearish type of lean. So a lean is a relationship of energy to us. I mean, for you, it's just a line, right? You don't know what we're doing, but it's a line. And when we've got an overlap or confluence of lines in an area, or a cluster, we'll say, then we can create a strategy, of starting a start point, connecting the dots, basically. So when we see this red number of 401% coming into the day, and the day hasn't started, we know the energy is going to try to push down. We know we've got support down here, right? But we also know that this energy up here is going to try to push down up here at 65. So I hope that makes sense. Let's see. The other one is, what do the two time frames represent, and what do they symbolically represent? He says he feels like he walked in halfway through the conversation. Sure. What it really is about is the lines that we're talking about, first of all, here on the daily chart. This is the refresh. This is where the crowd can push up. And the red number says the crowd can't push up today. Okay, that's all we know. And based on our intraday charts, which present the same kind of patterns, when they reflect that that 64 level is going to be pushing down, like for example, we were talking about these arrows. Draw a blue one this time. You can see when we close right here with this blue arrow, at the top we've got a down pink arrow. That's what we call a vortex arrow, and the red arrow is a diamond arrow. These are exhaust patterns. Okay, so what it's suggesting is that the lean of resistance up here is something that we need to pay attention to. This is our focus chart. You know, there's multiple charts, and you can get lost in looking at multiple charts. But you know, this has to be my master. This is my focus chart. So I'm looking at this, and I'm saying, okay, I got a two-dimensional lean. I got daily chart resistance. I've got, you know, focus chart resistance. I'm up here. I got some arrows that are pointing down. So if I drop to my trade chart, you know, which is a fifth of this chart, it's a 2000 tick chart at about, I guess, 11 a.m. Then I want to see it confirming the lean of resistance, and price is going to reverse there, and resistance is going to actually hold as resistance. Okay, so somebody asked, do I use the same tick values for all instruments? No, we do not use the same tick values for all instruments. In fact, we have a guideline manual for different instruments that you're going to trade, because, you know, 2,000 ticks in gold is not the same as 2,000 ticks in the S&P. So no, it does vary. So somebody's asking, so if the GPS on the daily is red and the refresh can't push up, right, then we should only look for shorts on the trade chart. You know, you can, the short answer is yes. You know, we have a trade plan in the room that we teach you, and in the room, this was a trade plan short. Okay, I won't go into all the details about it. You know, if you guys want to learn more about the details, you know, take a 10-day trial. Take a 10-day guarantee with us. Take a lease with us, and you know, we have a 10-day money-back guarantee backed up with PayPal. You know, if we don't meet your expectations, it's a satisfaction guarantee, not a performance guarantee. But essentially, you know, when we're looking at this, you could look at it that way. You could say to yourself, you know, is the daily chart going to be my master? You know, if it's red and it's pushing down, I'm going to look for my intraday charts to confirm that direction. Well, that's one way to go about it. Okay, in the room we create a trade plan that is not tied to just the directionality of the daily chart. We take that into account, obviously, because we're going to use those lines from the daily chart. But we want to see certain patterns develop that will teach you for exhausts, you know, on this left focus chart, because again, we don't want to diddle in the middle when the market can be easily moved up or down. We want to wait until price gets popped to an extreme into some known resistance, like for example, you know, this daily resistance up here, okay, where I've got this ellipse. When it gets up there and they can't pop it, you know, that's exactly and precisely where, you know, we start to connect the dots. You know, we're waiting for the chart to show us what we want. We're not letting the chart drag us around and tell us what to do. We're waiting and asking of the chart, are we associated and in a two-dimensional lean? If we are, then and only then, our trade chart to the right, this 2000 tick in the case of the S&P, is going to struggle to pop up through there. Okay, and that's going to be a significant lean for us. Like the 64 is a very significant lean for us today, 64 and 65. So when you're leaning against something, it's going to hold a stop more times than it's not, right? Nothing's perfect. I'm not saying, you know, I'm perfect or it's perfect, but when we combine the two-dimensionality of using multiple time periods and wait for the trade chart to show up with the numbers and all the good stuff, then our probabilities go way up, okay? So, yeah, I think that's it for the questions. See any other questions? Now, one of the other things that I wanted to mention here before we get into some of the good stuff, like, you know, the prizes that we wanted to give away, was when you're looking at this chart, you know, can you take a lot of trades? Can you be more active than not? Well, I would say that if you're going to be one-dimensional, meaning the chart on the right, okay, is only a counter trend trade chart. In other words, the chart on the right, the only time we're going to use that 2000 tick chart on the right is to fade the market. So, somebody asked, am I correct to say that you trade only reversal signals? It's partially correct. On that 2000 tick chart, we're only trading, counter trend signals. However, we will use the counter trend setup on the 2000 tick chart to establish a trend, like in other words, to trade locate into a trend. Like for example, if I go back here from yesterday, okay, yesterday we said we wanted to be short at I think it was 4.5 or better, and we got in the room. We got everybody. We talked about the timing and everything else. We had the leans and all the good stuff. Let me just see if I can sync this up. And that trade was not a counter trend trade, from this left chart's perspective. This left chart, if we go back here, there we go. If we go back to this left chart, what that is showing, let's get rid of these crosshairs. The left chart here, what it's showing is that, remember we were talking today about, choppy markets, and when the close, the black square here, gets below this solid white midline, we're starting to get congestion entrance. Well, when we start to get about 3 or more of these closes below the solid white midline, we're in a trend, okay, a new trend. But when we retrace back up to here, what we were looking for with all these lines and craziness up here is we were looking to join a trend. So the way we would join that trend is we were looking for a counter trend setup on this trade chart to the right, okay? So meaning this is directional, okay? The numbers we would expect to start to go weak. You notice we go 490, 156, 84, 0, and the market gets red and it rolls over, okay? And this tanked, and we expected that. We put that in our market report before 8 a.m. and then we look for the timing. But that's a trend trade. But again, the 2000 tick chart is used for confirming it with fading the loss of what we call the push of the crowd. So the crowd is going to push against those lines at about 65.5, and they're going to be unable to continue to pop price, and they're going to puke. And we know geometrically that's going to be the case, and we're going to go short, right? So the numbers give that clarity and provide the decision making, and you know exactly what your lean is at 65.5. That's what you're leaning on. So you're going to have a stop just beyond that. Okay. So just to kind of recap, when we're looking at all charts at any point in time, whether it's counter trend, trend trading, congestion trading, which is trading ranges and so forth, like today, we're always looking to find the lean. Don't trade without the lean, because as long as you got a lean, you've got something to hold a stop and be able to accept the risk against, that the probability is with you that the market's not going to be able to pop up through that resistance lean, for example. So that's essentially the message. I want to punish you for being here and asking some really great questions anymore. I want to get into some of the other things that you've been patiently waiting for. Okay, so I got a couple more questions, it looks like here. Okay, so he says he works a full-time job, and he looks more. This looks more like you have to day trade it in the trading room, correct? And if so, what are the trading times? Okay, so first of all, we have a trading room, and it's open between 9 a.m. and 11 a.m. Eastern, and that's just a ton of opportunity for somebody that wants to day trade. For somebody that wants to swing and position trade, we offer, let's see here, we offer in our report here, we call the Funds Manager report, and we do have fun. But we gave a video update just on Sunday night that the market was topping out, and that if you're a swing trader or position trader, that's something that would appeal to you with the JOB. Let's face it, I mean, I started there with the JOB. I used to trade options from a laptop wirelessly, and just to say that you can trade this system on end of day, with a daily chart, weekly chart, monthly, weekly, quarterly, all that, yearly chart. You need to have access to quotes, so if you have access with a phone like most people have, then you can look at certain structures and relationships. But the key is whether you're in the room live, there's always a replay sent out, and the more you see these structures and the timing present itself intraday with tons of examples, you're going to see that occur on end of day, and the repetition of seeing it intraday is just going to carry over end of day, which is going to make things much better. So I for somebody that has a JOB that wants to try to get into this, I do believe that it can be done, obviously, but I think getting into looking at the intraday patterns where there's a lot of repetition to really know what these daily charts, weekly, monthly, quarterly, yearly are doing is going to go a long way in making that happen. So a couple more questions. He says, can this strategy still have an edge during news events? And yes, because what happens in a news event is all of a sudden somebody's decided that they're going to put some liquidity in. Well, remember, we're always waiting for whoever it is that's muscling the market to get to an extreme point where they puke, where they can't push it anymore. So we don't diddle in the middle. We don't just get into the market until they pushed it too far too fast. So economic numbers can be traded, and like say for example a 2 p.m. Eastern FOMC meeting number, pretty volatile, right? You could use it. You just need to be very patient and wait until whoever's starting to move the market moves it to an extreme, and then and only then basically what we're suggesting takes place the same way, sets up the same way, and then you fade it, right? Another question, does your system use any Fibonacci retracements? The answer is no. We looked at Fibonacci, it's a great system if you like it. It really requires a lot of experience, figuring out which high and low you're going to draw your retracements with. And this is a more organic type of system where the software automatically draws the lines, and the rationale is always the same with the lines. So when you understand one line on a trade chart, that's the same analogy that you're going to use for that particular line on any time period, whether it's a yearly chart or a 2000 tick chart. So somebody also said, do we have a room trial? We don't have a free room trial, but let's talk a little bit about that because I think we're getting close to the end here. Let's talk a little bit about that. So this is our website here, and you'll notice that you can click here to download right away a sample of trading legend Charles Drummond's psychology paper that he wrote back in '96. And then you can also get access to our YouTube daily videos and be alerted to the weekly webinars if you want to do that. If you want to learn more about, really what Drummond geometry is and how it all kind of came about, you can click here later. But what I'm going to suggest is if you click on Work with JB, this is the page that pops up here. You'll see at the top, are you an experienced trader? I'm just going to go down to the bottom here a little bit. I'm going to talk about what we offer, for somebody, because since somebody asked, do we offer a trial? What we offer is a lease. You can lease the software, and you can lease it and get certain bonuses with it. So essentially what we're doing today is we're giving away 3 platinum leases. Now we have two different kinds. We have our basic lease, which is the software. You know, you lease the software. It's $199 a month. And that doesn't come with room access. It doesn't come with the morning brew market report. For $399, it includes not only the software, complete software package, but the subscription to the room for a month and the morning brew market report for a month. Now we teach you how to do the morning brew market report for yourself, so you don't need us. And the room isn't about coming in and taking our signals. It's about teaching you how to understand this so that you can apply this for yourself. In other words, you won't need us. So in other words, learning in the live room, you're going to learn our trade plan. You're going to learn where the rules are. You'll learn that at certain times that those rules can be somewhat augmented, you know, and a trade can be taken because you know the lien, okay? And that's really what it's all about. So for people that want to lease the software, there's a couple of, let's see, I should go up here actually. Lease the software, there's the options there, $199 for a diamond lease and the platinum lease, which includes everything. This is everything you need to begin. That's what we're giving away today, the platinum lease package. There's also a subscription to the analyst room in the morning brew market report. There's a 10-day guarantee backed up by PayPal. No questions asked on the software leases. For example, say you wanted to own the software, okay, because you've taken a lease, you find out that it's, you know, fitting your, meeting your needs, for example. What we offer is what we call the Battleax Club. And this is for software owners or lease people. But in this case, this is for people that want to own the software. We have a special on right now where it includes all the videos you need. Everybody's got videos. We got the software, the room, the market report, and a psychology set of videos called Trading Mind Theater. Now, we have a special price that's on right now, and essentially, if you're looking to own the software, there's two different options, okay? So the one option, the one payment plan option is $69.90 US now. It's our lowest price ever, and it comes complete with all those bonuses that I just mentioned. One payment owner only, that's $2,000 US off. Now the other one is for somebody that you know, wants to put it over a payment plan, and it has $750 US off the regular price. And what it means is, here's how the payment plan works: is you put down $39.90, and there's no payments for the next 3 months to help get going. So after the 3 months, after you get going, then you would start making 3 more consecutive monthly payments of $14.17 US, and that's how you end up owning the software. But in order to begin with, you know, leasing the software is the best option, because then you've got a 10-day money-back guarantee. Okay. So let me see. The other question is your room open for market calls or training each day? Well, we do both. We show the trade plan where the market calls are. Like, for example, you know, going back to here, so today we looked at, let's see here, going back to today, let's see here, excuse me. This was a market call we did today. This is one of our setups. So 3.5 or better, minimum down to 1. And like I said, we went down a little lower. Okay, so there's market calls. Then we get into taking questions afterwards, and we make sure everybody understands things, because, you know, learning things in a room in the moment tends to be a lot better to quickly get on board with learning, as opposed to, you know, looking at some videos and that kind of thing. So so the other question somebody had was, after one payment plan, is there anything further to purchase? There's nothing further to purchase. Okay, so if you're into wanting to own the software, you own the software. You've got a lifetime lease or a lifetime license, and what this gives you is it gives you a 1-month subscription in the room, 1-month subscription to the Morning Brew, and you know, everything you need to get going in the trade plan that we discuss and teach in the room. So there's nothing else after that. What is the time limit for this offer? The time limit for this offer is when we decide to take it down. Originally, we had put our prices up for quite a long period of time. We were spending an awful lot of time doing one-on-one with traders, and now that we've got the room, we can get back to doing a little more trading of our own. Plus, we can satisfy the learning and the one-on-one questioning trading room. So this is one of the reasons why we've been dropping the price down a little bit to you know, reflect the fact that I'm not having to spend as much time doing one-on-ones. So the limited time offer, what's the time? We'll take it down when we decide. I'm not quite sure about that yet. So essentially now I want to get into giving away these 3 leases. You know, you've been patiently listening, and what I'm going to ask you to do is open up your email. I had typed in that email earlier, jb@drummondenergybands.com. Now, if you got in here a little bit later, let me just copy and paste it in again here so that you have access to it. But there's the email. We have Trish watching the email, and I'm going to ask a question that's related to the presentation today. And if, for example, you know the answer, then type it in your email to jb@drummondenergybands.com and send it over. And then she's going to determine the first 3 people that have the correct answer. And then I'm going to read out your names. I won't necessarily read out your last name. I'll use a first initial. And then we'll be in touch tonight about setting you up to get going and have you in the room first thing in the morning, get you set up with the software, the trade plan, and the videos. Okay, so when I was going through this presentation, I had mentioned a couple of different times about something that you don't want to forget. You know, when you want to connect the dots, what's the very first thing that you don't want to forget? So if you want to email me your answer, what is it that you don't want to forget before you look to trade? And we'll look at the first 3 people that have the correct answer. Then we're going to kind of wrap it up, you know. So, you know, there's a lot of different ways to use this system, but we wanted to show you in the trading room how we would use it, you know. So we've created a trade plan that gives you the rules that we're looking for, you know. Oh, how many times I've been in a room where you know, the trader had a signal and he's gone short and everybody else is like, huh? Well, you know, there's times when you can bend the rule, but you got to have something, right? You don't want to forget that specific thing before you get on board to take that trade, right? And those are the times when you can, you know, you can defer a little bit from the trade plan, but essentially the trade plan is going to provide those rules and that very high probability strategy that works so many times over and over and over again. It's a wonder why anybody would want to change it up, really. But anyway, so we got a bunch of emails coming in. I'm going to give it a couple more minutes. You know, there's a lot of people that sent in emails here. Trish is telling me already. So I'll just give it a few more minutes. You know, if you're somebody that's looking to trade, you know, whether you're position trading or swing trading, one of the things that Charlie used to do is you look at trading the highs of the yearly bar, and you know, if, for example, you know, we've got we'll just say this particular 50,000 tick chart here with the zeros on it, you'll notice at the very top, see how these numbers are going 162, 50, and 0. What that means is it means that this means that these dots up here, this upper energy band, is going to hold, when these numbers down here for the refresh get weaker too. So this is a really great place to lean to get short, right? And for example, that could be a yearly line. And we're looking at something like that on the yearly to a certain extent already. And, taking the fade back on down is what he used to do. He used to send out a report every year at different yearly configurations, structures and stuff like that. But, this is really taught in the S&P in the room because we want people to learn the strategy specifically on one instrument under all conditions, so that you can look at it from any way you want and you can still understand it, whether it's gold or treasury bonds or the TF. But when we're looking at the market and doing it the same way over and over again, the amazing ability of the mind to have confidence to take action, the same way over and over again, just goes way up, because it's always the same thing on whatever instrument that you're trading. Okay, so let's see. Trish is saying we've got 3 people here. Let me see here. Let me see here. Okay, she's saying that we've really only got 2 people. Okay, yeah, that only looks like 2 people. So I'll announce the first 2 people in the room, and then we'll see if anybody else. Oh no, yep, no, there is 3 people. You're right. Okay, so yeah, there's John, J-O-N-G. He'd be the first person, and the second person would be Bongani M. Bongani M. And the third person is Kevin H. So there's, I'll just repeat that, John G, as in the last name G, and Bongani M, and third and final would be Kevin H. So those are 3 people. We've got your email, obviously, so we will be in contact to set you up. And the answer was, don't forget the lean, right? We have to take into account our higher time period, the lean of resistance or support. So anyway, we're going to leave it there. I'm going to hand it back over to Ryan here in 1 second. If you're looking to get on with us, joining up our live webinars, if you click here, we do a webinar every Tuesday at 4:15 p.m. Eastern. And of course, if you sign up here, you'll automatically be entered into our list and notified of when that occurs. So I'm going to hand it back over to Ryan, and thank you again all for your interest, and wish you all the best.
All right, this is Ryan hopping back on from NinjaTrader, and I'd like to give a special thank you to JB Wells of Drummond Energy Bands for his great presentation this afternoon. The NinjaTrader ecosystem is pleased to sponsor these weekly vendor events as a value-added service for all of our clients. If you find value in these events, we would hope that you would attend them on a regular basis. And we'd like to remind everybody in the room that the information presented today was that of Drummond Energy Bands and not that of NinjaTrader Group. All information presented was for educational purposes and should not be construed as trading advice. If you have any interest in joining up with NinjaTrader platform training events throughout the week, we do hold those live, and you can check out the schedule at the following link. Again, we appreciate the time that you spend with us in these events. We hope you enjoy the rest of your day, and we hope to see you in our future webinars. Happy trading from all of us here at NinjaTrader.